Good evening, everyone. Welcome to the official YouTube channel of Office of Study 24/7. First of all, let me know how are you all, and also let me know is audio video both are okay. Are we good to go? So as you know, we have started this Achiever series on 4th of December, and since then we are discussing particular module for a certain period of time. Like let's say, for example, for 10 days, for 11 days. I guess for 16 days we have discussed module A, in which we have done the questions, the basic questions module unit wise in a module A. Then we have practiced certain advanced questions, like the questions which are actually going to be there in the paper in the form of, in the way of the difficulty level. So that we have done already. Module A, module B and module C, all the three modules we have completed, and today we are starting your module D. So this is the first class for the module D, as you can see, and there are only 4 modules. In IE, IFS or any subject of your JAIIB, we have 4 modules. Each subject have 4 modules, and if I talk about units, the IE, IFS subject have 45 units. So today we will be starting with the module D, unit number 1. Or in overall, if we talk about, this is the unit number 29, that is your financial market. So unit D start from unit number 20, module D start from your unit number 29 till 45. We have module D, and in this particular unit we are going to talk about the financial market. Clear? Those who are joining these sessions for the first time, I would like to inform you all that these are the sessions in which we are discussing your JAIIB syllabus for May 2024 paper, and these sessions will be very useful for all of you to know what kind of paper will be there and what we have to study and how we have to study. Apart from that, you can learn how to approach a particular question. So all these things will be available in these series. If you want to regularly join these series, join our Office of Study 24/7. In the evening for 7 p.m. for IE, IFS, 6 a.m. for PPB. And if you want the same subject for your bilingual sessions, let's say for example for IE, IFS bilingual, you can join the session at 7:30 a.m. All these sessions are available on Office of Study 24/7 Monday to Saturday. Apart from that, if we talk about, apart from that, you will find, if you have not seen earlier sessions that have been started from 4th of December and you would like to check all the sessions, you want to see all the session, so that you can go with the playlist. In the playlist all the sessions have been updated. You can watch the recording of each and every session. Okay, now let's start. Today we are going to discuss unit number 29 of your module D. So before moving forward to the questions, first let's understand what this chapter is talking about, then we will go forward. So when it comes to the financial market, we have discussed in the module C about the financial system. What is financial system? A system in which exchange of funds will be done among the persons who have surplus money and the persons who have deficit of money. When you exchange these funds, this can be done with the help of your financial institution, financial market and financial instrument. Financial institutions means bank, NBFCs, RBI, Government of India, primary dealers, etc. Financial instrument means shares, bond, debentures, mutual fund, your insurance, your Casa Rafa, all these are the financial instrument. But when it comes to the financial market, we have the financial market kind of place where each and every person can go and raise fund for their future purpose. But these market will be selling, or these market will be using different types of financial instrument to fulfill your need of money. Like if you go for the money market, you will be able to raise capital for short term period by using the instrument, your commercial paper, certificate of deposit, call money, notice money, term money, etc. But if you go for a capital market, you can raise money for long term period. It means more than 1 year, and by using share, debentures, bond, you can do that. Apart from this, if you go let's say in the insurance market, you will get insurance policy. So there are different markets are there. So these are the financial market that gives you the place, whether it is physical or online space it is, they are providing you the space or place where you actually can interact with the persons who have surplus money and the persons who have deficit of money. And by interaction means you can exchange your funds, you can fulfill your need of capital, and this is what your financial market is. Okay, I guess it is clear. Now if I talk about financial market, we have money market, we have capital market, we have forex market, okay, we have insurance market, we have your pension market, we have debt market, we have credit market, etc. So all these are the types of financial markets we have in the country. All these are financial market. Money market regulated by RBI, it is for short-term period. Capital market regulated by SEBI, it is for long-term period. Forex market regulated by RBI, in which foreign exchange will be done, foreign currencies will be traded. Insurance market regulated by Adda, in which insurance policies you can sell. Pension market regulated by PFRDA, Pension Fund Regulatory Development Authority of India, which mentions the pension schemes, etc. Debt market is a part of actually your capital market. Debt market is a part of your capital market, in which by issuing bonds and debentures, the debt instrument, the loan instrument, you can raise capital. And the credit market is a very simple market in which actually we are taking loan from the bank. We are going to the bank and we are filling the application form, and bank issues us the loan or disburse the loan amount. That's the credit market. Okay, so all these are the financial market that we have to study in this particular unit. So only the introduction of all the markets are here. Hana, in this unit, you will find only introduction of each and every market of this. But the detailed study of these markets you will be doing in the module D only, but in a separate chapter. Like you have a separate chapter for money market, you have a separate chapter for capital market, you have a separate chapter for forex market, same for insurance, same for pension. So in the first unit of your module D, that is unit number 29, you will just study the basic introduction of all these markets. Okay, now let's move forward, and now we will be discussing about the questions. Let's cover this topic of module D in form of MCQs. If you have any doubt in any particular chapter or any session in any question, I keep telling to you that you can drop a message in the comment section. I will check your comment and answer there. So if you have any doubt, you can ask. Okay. So the first question is talking about which of the following is not a factor for price discovery. In any market, if you are going, in each and every market, you will find that there is a certain price mechanism. Without having a proper price mechanism, you won't be able to run the market. To run any market, you need a price. Hana, you have to decide the prices. So, and that's an important factor of any market. The pricing is the important factor for any market. So which of the following is not a factor for price discovery? First is saying market stability, second is saying risk appetite, third is saying available information, and fourth is saying supply and demand. So it cannot be D, because demand and supply are the market forces. Demand and supply are known as what? They are known as market forces. And these market forces are the first factor on which the prices will depend. Okay. Available information, obviously how much your product information is available. Then risk appetite, these all are the factor for price discovery, but not a market stability. So right answer will be D. Market stability is not a factor that can be used to decide your price discovery in the country. Okay, for any market. So the right answer will be your A option. Right answer we have is A option, you can see. Now, second question is talking about which of the following are functions of the financial market. Functions of financial market, when you are investing your money, when you are going for a financial market, which of the following you think is a function of financial market? First is saying capital formation, second is saying liquidity, third is saying price determination, fourth is saying all of the above. Which of the following is correct? The functions of financial market. So financial market cover each type of market that I have given example to. Okay, and you have to answer which of the following is the function. So it actually do the capital formation. You raise capital, it means it formulate capital for you. Then liquidity, it manage the liquidity in the market. Price determination, obviously, so right answer will be all of the above. Your right answer will be all of the above are the functions of financial market. All these things can be done under the financial market. So right answer will be your D. Clear? Next question. Next is talking about state development loans are instrument in which of the following market. So state development loans, obviously as the name says, it's a loan that will be issued by the state government. This is issued by whom? This is issued by state government. Actually, this is a kind of security that is issued by state government that have been named as a state development loan. Now you have to answer in which of the following market this will be issued. First money market, second credit market, third debt market, and fourth is your derivative market. A, B, C or D. So if you talk about state development loan, it is issued by state government. As I have told you that this is a government securities that is issued by state government. State governments are issuing security that have been named as a state development loan. So earlier what used to happen, earlier government of India was allowed the state government that they can issue treasury bill. So by issuing treasury bill, the state governments were capable of raising the fund, but now the state government cannot issue the treasury bill. Only central government can issue treasury bill. It means so state governments are not allowed to issue the government security there. So they have been allowed to issue the state development loan. They are the government security of state government. By issuing this, they can raise capital from the market. And if it's a government security, what type of instrument it is? It's a debt instrument. What is the meaning of debt instrument? Debt instrument means simply an instrument which is actually helping you to raise loan from the market for a particular period of time. Okay, so the debt instrument, when you talk about, that's a loan instrument, because the maturity period of this government security will be prefixed. How much rate of interest will be paid, that is also prefixed. So what type of market it is? It's a debt market. Okay, debt market simply means whatever instrument you are using to raise capital in which the maturity period will be pre-decided and the rate of interest will be pre-decided. If these two parameters, or I can say these two factors are there in your any instrument, that will be your debt instrument. In shares, you cannot find the maturity period. It depends on the individual person when they want to sell, when they want to purchase. But in the bonds and debenture, it is already fixed, and same with the government security. So the right answer here will be C. That's a debt market. Okay, right answer will be C. Next question. Next we have here certificates of deposit are instrument in which of the following market? Certificates of deposit are instrument in which of the following market? So when we talk about certificate of deposit, first of all, certificate of deposit are issued by banks, or you can say financial institution. They can issue certificate of deposit. Okay, the minimum time period that can be issued for 7 days and the maximum is 364 days. I guess by checking the maximum duration or maximum validity of a certificate of deposit, you can answer that which of the following is correct. Okay, apart from that, their banks and financial institution can issue the certificate of deposit. This is secured instrument. This is secured negotiable dash instrument. What is the dash stand for? It is money market. So certificate of deposits are the instrument in which of the following market? It is in the money market. So the certificate of deposits are your secured negotiable money market instrument. It is secured because bank and financial institutions are issuing this. It is negotiable because you can use this particular instrument to negotiate. You can transfer this from one person to another to make the payments. So the right answer here is money market. Right answer will be your money market, certificate of deposits. Right answer is A. Next question. Which among the following is not a segment of financial market? Financial market segment means not a part, not a part of a financial market. Which of the following is not a part of a financial market? First is saying agriculture commodity market, second is saying credit market, third is saying money market, fourth is saying insurance market. So what do you think? Which of the following is not a part of your financial market? A, B, C or D? So insurance market, money market, credit market, this is the these are the part of money these are the part of financial market. But when it comes to the agricultural commodities market, they are not financial market, they are the commodity market. The agriculture commodity market is not a part of financial market, it's a part of your commodity market. So the right answer will be here is A. Okay, right answer will be here is A. Next question. Next we have which of the following are the functions of financial market? The functions of financial market. First is saying price determination, second is saying fund mobilization. Third is saying liquidity. Fourth is saying risk sharing. Fifth is saying easy access. Fifth is saying easy access. Sixth is saying capital formation. So out of these 6 points, what do you think, which of the following are the function of your financial market? First is only 1, 2 and 3. Second is only 3, 4. Third is all except 5 and 6. And fourth is all of the above. So what do you think, which of the following is actually your function of financial market? A, B, C or D? And the right answer is financial market actually do the price determination. It actually mobilizes the fund from one person to another, from one party to another. It actually maintains the liquidity. It actually do the risk sharing. It give you easy access to raise capital for less than 1 year, for more than 1 year. Capital formation, it means all of the above. The right answer will be all of the above. So all of the above are the functions of financial market. Right answer is D. Okay. Next question. Next we have, there are a number of factors which determine the level of price discovery. These include which of the following? So there are a number of factors which determine the levels of price discovery. These include which of the following? First is supply and demand, attitudes to risk, volatility, available information, market mechanism. So the number of factors which determine the level of price discovery in the financial market. A, B, C or D? Which are the following correct? A, B, C or D? Okay, so right answer is D, all of the above. Right answer will be D, all of the above. Okay. Next question. The money market instrument mainly comprise which of the following? So money market is, first of all, is a short-term market. Short-term market means less than 1 year market. The money market maximum duration will be 364 days. It is regulated by RBI. Money market use the short-term financial assets to raise capital from market, and these are the close substitute of money. So whatever short-term financial assets RBI is using in the money market to raise capital for less than 1 year, those instruments are your substitute or close substitute of money. It means they can easily convertible into money. You can easily convert them into cash. So first is saying call money, certificate of deposit, shares and debenture, bonds, treasury bill, bankers acceptance, commercial bill, commercial papers, intercorporate funds. So what do you think, which of the following is a part of your money market? So call money, notice money, term money, certificate of deposit, they are the part. Treasury bills are the part, bankers acceptance, commercial bills is a part, commercial paper, intercorporate funds are the part. Apart from that, the commercial paper is written, cash management bill also a part of your money market. But shares, bonds and debentures, they are the part of your capital market. Okay, they are the part of which market? They are the part of capital market, because more than 1 year you can raise capital here. So right answer will be all except 2 and 3. So all are the part of money market except second point and the third point. So all except second and third is the right answer. That is your C option. Okay. Now next question, we have a derivative as a financial instrument. Is. So there is a definition, there is a certain term statement have been given to you in the option that is regarding derivative. You have to answer which of the following is correct about the derivative. So first is saying derivative is a financial instrument which is derivative instrument whose value changes in response to the change in a specified interest rate, security price, commodity price, foreign exchange rate, index of price or rates, credit rating or credit index or similar variables. Sometimes they are called the underlying asset. So the first point is trying to say that the value of derivative can be changed. The value of derivative changes as per the underlying assets. So on the basis of underlying asset, derivatives value can change. Second is saying that requires no initial net investment or little initial net investment relative to the other types of contract that have a similar response to changes in the market condition. And this is also true. Okay, it says that no initial net investment or little initial net investment is required to you. Okay, and the third one is saying that is settled at a future rate. It means all are correct about the derivative. Derivatives are actually traded on the future date always. Second thing, in case of derivative, their value will be derived from the other variables, and those other variables will be known as your underlying asset. And if we talk about the derivative market, it will read no initial net investment or a very minimum initial net investment. So right answer will be your D. All of the above are true about the derivative instrument. Okay, and derivative market is also regulated by SEBI only. Now, in the wake of financial liberalization during the early 90s, the Committee on Reform of the Insurance Sector Dash Committee recommended in 1994 the opening of the insurance sector to the private participant and institution of a separate regulatory and development authority. So which committee was there that have said that the private insurance company should also be allowed to work in the country? Like the competition of the private sector have been introduced in the insurance market. What do you think? Which of the following is correct? R.N. Malhotra Committee, Ghosh Committee, Rangarajan Committee, Krafi Card Committee. So your right answer for this particular question will be your Krafi Card Committee is not, because it was introduced for NABARD. Hana, do remember that. This is the committee that introduced NABARD. So right answer is A. Whenever it comes to the insurance market, the important committee you have is R.N. Malhotra Committee. So right answer will be your A. Okay. Good evening, everyone. Welcome to the official YouTube channel of Officer Study 24/7. How are you all? So first of all, let me know is audio video both are okay. Are we good to go? And as you know, every day we are discussing one particular unit of your IFS in the evening 7 p.m. So today we are going to discuss the unit number 30, because you know we have started module C. So this Achiever series is started in December and now it's going to be end soon. And after that we will bring something new for all of you. But yes, this is the series that is right now having D module discussion in the classes. So once we have completed module D, the whole chapter we have discussed one time on YouTube. Okay, that in the form of your basic questions and advanced question both. So but as I keep saying to all of you, this is not sufficient. To clear the paper, we have to be more engaged in the conceptual study, and more depth study is required in the paper. So that's why you have to make sure that these sessions will help you to know what kind of topic is it and how to attempt the question, how to approach the question. But for the detailed analysis of the subject, you have to go through with the conceptual classes. Okay, and those who are first time joining this session, I would love to inform you all these sessions are going on Monday to Saturday, in the evening at 7 p.m. for IEIFS, in the morning for PPB at 6 a.m. These sessions are going on. Apart from that, the other other subject sessions are also going on, that you can find only on Officers at the 24/7 channel. So this is our class number 2 of module D. You can see money market is our today's unit. That's a unit number, actually not 29, 30. Okay, it is the 30th unit. Okay, 29 we have done yesterday. That was the financial market. Okay, so it is the 30th unit. So let's talk about first the topic, and then we will move forward to the questions. Now, before talking about the topics, one thing I want to add here, if you haven't seen the earlier sessions, like from module A, B, C, you have not seen that. And if you like to check these sessions out, then you can go visit the Officers at 24/7. Go to the playlist. In playlist, all the sessions recordings are available. You can go and directly watch the recording of the session there. Okay. So let's start about the money market. What actually the money market is. So money market is one of the financial market, as I have told you in the unit number 29 discussion, that in financial market unit we are only going to have the discussion or the introduction of all the financial market, right? But then we have to study these topics in individually also, because individual units are talking about the single market here. So unit number 30 talk about the money market. First of all, money market regulated by RBI. Who regulates this market? It is regulated by RBI. It's your short-term market. Why it is known as a short-term market? Because it's a market of less than 1 year. It is the market of less than 1 year. Okay. Now next, if we talk about market of less than 1 year, we are saying here, it means it is for 364 days. Okay, the duration. And it use short-term financial assets. It use what? It use short-term financial assets. It use short-term financial assets to do what? To simply short-term financial assets to perform what? To perform your close substitute of money targets. It means short-term financial assets it is for less than 1 year, their duration, their maturity period will be less than 1 year, but they are what? They are the close substitute of money. What does this mean? Close substitute of money. This means that it can be easily converted into cash. You can easily convert them into the cash. That is known as close substitute of money. Okay, apart from that, if I talk about money market covers the certain instrument that have call money, notice money, term money, commercial paper, certificate of deposit, treasury bills, bankers acceptance, your repo auctions. It covers your cash management bill, etc. All these are the instruments of your money market. So money market simply a short-term market which is regulated by RBI, and for short term you can raise your capital requirement from this market. Okay, that's your money market. Next. So we have first question that is talking about here, what is the maximum tenure for long-term repo operation, LTRO. So LTRO was introduced by RBI at the time of COVID-19 pandemic. So in the COVID, RBI have seen that there are so many sectors which actually need capital. That there are so many sectors which actually need capital. They are the productive sectors, but still they do not have capital properly. So RBI introduced the LTRO, which will be providing the repo auctions to the banks. So bank can participate in the auction, bank can bid there and take loan from them, loan from the auction, and that auction loan will be invested in the or will be given as a loan in the productive sector. That's why RBI introduced the LTRO. And the duration of this was minimum 1 year and maximum 3 years. So your right answer is B. Okay, LTRO maximum period we have or maximum tenure we have is 3 years. Minimum is 1 and maximum is 3. So right answer will be B. Okay, next. What is the minimum net worth required for a corporate to issue the certificate of deposit? If a corporate wants to issue a certificate of deposit, how much capital they have to have? How much net worth, minimum net worth they have to have? A, B, C or D. 1 crore, 4 crore, 5 crore, there is no minimum net worth requirement. So when it comes to the certificate of deposit, first of all, it is issued by banks or financial institution for the minimum period of 7 days and the maximum period of 364 days. The amount of certificate of deposit can be issued is 5 lakh, and after that, if you more than that you want to issue, then therefore multiple of 5 lakhs. It should be multiple of what? It should be multiple of 5 lakhs. Okay. Apart from that, if we talk about the certificate of deposits are secured money market instrument, they are negotiable as well. Why they are negotiable? Because they can be transferred from one person to another. Why they are secured? Because it is issued by banks and financial institution. So how much minimum net worth is required? No such condition is there. No such condition is there. There is no minimum net worth requirement. So right answer will be D. Also focus on the explanation that I have given here. These points are also important. So right option will be here, D. Okay. Next question. Who is the issuing authority of treasury bills? So treasury bills are the government securities. They are what? They are government securities, and they have three types. What are these three types of treasury bill? One is 91 days treasury bill, second is 182 days treasury bill, third is 364 days treasury bill. These are the three types of treasury bills we have: 91, 182, 364. And it is issued by whom? It is issued by the central government. So the right answer will be your B, it is central government. Okay, and do remember, the treasury bills is used by RBI in the monetary policy transaction also, okay, or in the money market as well, to maintain the liquidity of the market. So the right answer will be B. Next question. The maximum period for notice money. The maximum period for what? For the notice money. So call money, notice money and term money, these three are the money market instrument. So notice money have 2 to 14 days duration. The maximum period will be then 14 days. Minimum is 2, maximum is 14. Okay, so your right answer will be C. In the notice money, it is an interbank transaction that they perform. What is interbank transaction? Only banks are giving loan to each other. That's the interbank transaction. For how much duration? For 2 to 14 days. Okay, so right answer is your C. Maximum is 14 days. Minimum is 2. Next question is talking about RBI would conduct the term repo of 1 year and 3-year tenures of appropriate sizes for up to a total amount of dash. How much crores that you have to answer? 1 crore, 2 crore, 1.5 crore. Then the first two LTROs were conducted on February 17 and 24, 2020 for dash crores each for the tenure of 3 years and 1 year respectively. So LTRO was introduced at the time of pandemic just to make sure that the productive sectors will get proper liquidity. Okay, so what do you think? So the total amount, it says that it should be used, or it should be issued or conducted the term repo operation for 1 year and 2 year. It is 1 lakh crores. It means it cannot be B, it cannot be C. It can be either A or D. Okay, but when you talk about the first two LTROs was issued, it was of what amount? It was of 25,000. That's why your right answer is A. The second one was increased to 50,000, but the first one was the 25,000. So right answer is A. Okay, now the period of lending may be for a period of dash, which is known as call money, and between dash, which is known as notice money, and the term money refers to the borrowing lending of funds for a period of exceeding dash duration. So now the call money, notice money, term money you have to answer. In the call money, notice money and term money, the only thing difference is their maturity or their duration, because these all the three instruments are actually for your interbank transaction. They are for what purpose? They are for interbank transaction when banks are giving loan to each other for the different duration. In the call money, notice money, term money, the rate of interest that will be charged from each other by the commercial banks, whether it is in India or global banks, they used to charge MIBOR. They're still charging MIBOR. Mumbai Interbank offered it. In the international, when the global banks are giving loan to each other, they used to charge LIBOR, London Interbank offer rate, but it have been replaced by alternate reference rate. So now they are taking alternate reference rate. So they have only one difference between them, and that difference is what? The duration. So in the call money, it is for 1 day, it means 24 hours, or you can call it 1 day. Okay. Second, for notice money, I have just told you it is 2 to 14 days, and for your term money, it is exceeding 14 days. Or up to when? Up to 1 year. So 15 to 1 year you can call it, or you can call it 14 days to 1 year. So first is saying 5 days, no. Second is saying 7 days, no. Third is saying 1 day, this is correct. 2 to 14 days, correct. For 14 to up to 1 year, this is also correct. Right answer is C. Okay, so 1 day, you can call it overnight as well for call money. 2 to 14 days, it is notice money. 15 to 364 days, it is your term money, or you can call it exceeding 14 days and up to 1 year. Okay, so right answer will be your C. Right answer is C. Next, which of the following are the functions of money market? What are the functions of money market? So money market we have discussed, it's the market for short-term financial assets which are close substitute of money. And here you have to answer what are the functions of money market. Okay. First is saying it provides an equilibrating mechanism for demand and supply of short-term funds. Second is saying it enables borrower and lenders of short-term funds to fulfill their borrowing and investment requirement at an efficient market clearing price. Third is saying it provides an avenue for central bank intervention in influencing both quantum and cost of liquidity in the financial system, thereby transmitting monetary policy impulses to the real economy. And fourth is saying all of the above. Now you have to answer which of the following is correct. And the right answer is actually all of the above. All are the functions of money market. It do actually fulfill the demand and supply of the short-term funds. It actually enable the borrowers and lenders of short-term fund to fulfill their requirements. And it actually provides avenue for the central bank intervention which influence both quantum and cost of liquidity. So right answer will be all are the functions of money market, D. Okay. Next, the settlement of money market deals is by electronic fund transfer using the dash system operated by RBI. The prepayment of borrowed fund also take place through the same system on the due date of the repayment. So the settlement of money market deals is done by the electronic fund transfer. Okay, and that use which of the following system that you have to answer. Which of the following system will be used? NEFT, RTGS, IMPS or none of the above? Achha, one thing is there, you can eliminate one option here. It is saying operated by RBI. If it is operated by RBI, it cannot be IMPS because IMPS is operated by whom? It is operated by your NPCI. Okay. And the second thing is it also cannot be NEFT because NEFT do not perform the gross settlement. And in case of money market deals, you have to perform the gross settlements. The right answer is RTGS system. So, electronic fund transfer using the RTGS system, it settles the money market deals. So, option number B will be correct. Okay. All of three are 24/7 services now. Okay. Next question. Commercial papers can be issued by maturities between a minimum of dash days and a maximum up to dash from the date of issue. So apart from that, do remember commercial papers are issued by corporates. Okay, the minimum is 5 lakh. Thereafter, multiple of 5 lakh is allowed. Multiple of 5 lakh is allowed. So minimum 5 lakh, after that multiple of 5 lakh. Then apart from that, it is very important to know that commercial papers are unsecured, non-negotiable money market instrument. Why non-negotiable? Because they are unsecured. So they are unsecured money market negotiable instrument, non-negotiable instrument because the corporates are issuing them. And if the corporates are issuing, there is a chances of risk, there is a chances of fraud. That's why they are unsecured. And the minimum is 7 days, maximum is up to 1 year. So the right answer for you will be 7 and 1 year. B. Okay, right option will be B. So do remember all these points about the commercial paper. In commercial paper and certificate of deposit, everything is same except commercial paper are unsecured, certificate of deposit is secured. Commercial paper are non-negotiable, certificate of deposit is negotiable. Otherwise, apart from that, commercial paper are issued by corporate and certificate of deposit are issued by banks and financial institutions. So these three differences are there. Right answer will be B. Okay. Next, BRDS stands for, what is the full form of BRDS? A, B, C and D. First is saying bill rediscounting scheme. Okay, second is saying bank rediscounting scheme. Okay, third is saying bill repurchase scheme. Fourth is saying none of the above. A, B, C or D. And the right answer for this will be, it's a bill rediscounting scheme, BRDS, bill rediscount scheme. Okay, right answer will be A. So these are the questions that we have discussed from your unit number 30 of your module D. Okay, that's a money market. So first of all, let me know how many answers you have given correct here. And if you have any doubt, you can always ask in the comment section. Drop a message in the comment section. I will check and answer there. Apart from that, you can see if you know someone who is looking for a bilingual batches for JAIIB preparation, you can let them know that the Shapat batch is there. It started from 10th of January. Apart from that, if you guys are looking for a dedicated batch in which detailed conceptual study, your class PDFs, your ebooks, your topic-wise test, full length test will be available. So the resolution batch is there, in which AFM and PPB started. IE, IFS is the next subject that I am going to start. Okay. So how to enroll? First, you have to download the Adda 24/7 application. Go to the home page of the application and click on the JAIIB CIB section here. Okay. Then you have to click the JAIIB May 2024. You will find all the batches here, test series here, the video courses, the ebooks, the hard copies also. All these are available. How to enroll? Click on the batch. Do check the offering. Scroll down if you want to check the study plan. Study plan is available for both the subjects. Okay. Then click on the buy now option. Enter a code here. If you want more than 75% discount, use the code Y496. Click on apply. Once you apply, you will find 77% discount here. 1% additional discount will be available if you use the coins available on your application. So 78% discount, 6 months validity, coupon code is Y496. Everything will be covered here in this batch. Okay. So this is how you can enroll. This is how you can enroll in any other batch. If you want an individual subject batch, that is also available at the same place. Okay, the process is same. And apart from that, if you want to enroll in, or if you want to join regular YT sessions of your JAIIB May 2024 preparation, so first you have to subscribe the channel Offices Adda 24/7, press the bell icon so that all the upcoming sessions notification will be given to you from the channel. And if you haven't seen the earlier session, do go to the playlist, check there, and you will find all the sessions recording available there. And also share the session with the bankers whom you know that they are preparing for the JAIIB May 2024 paper, so that more and more people will be joining us and will be clearing this paper. Okay. So that's all for today. Let's end the session here. We'll be meeting tomorrow. Acha, one more important information with all of you. If you remember, we have just conducted your JAIIB PPB readiness test, in which we have talked about what paper pattern IIBF is giving, same paper pattern we had. And I am coming up with the analysis of that particular mock test from 8 to 10 p.m. today, and tomorrow as well from 1 to 3 p.m. So today we will be having a part 1. Tomorrow we will be having a part 2. So do not forget to check that session also, 8 to 10 p.m. today. And on 24th of January, you will find it for the your 1 to 3 p.m. Okay. So that's all the information I wanted to give you all. Thank you all for joining the session. Take care everyone and be connected to the channel. Take care.